Hello everyone, my name is Sunday and welcome to this episode. Yes, as we all know, every Sunday evening we carry out our normal technical analysis. All right, so today we are going to be analyzing some currency pairs and for us to know where the opportunity lies so that we can position and capitalize on the moves and make something out of the market. What makes you a trader is the ability to identify an opportunity in the market and take advantage of it, make something out of the market. So that is what makes you a trader. And be aware that it's not every move that you have to catch up with. Some moves, you just let it go. All right. So that being said, for the technical analysis, we are going to be performing technical analysis step by step on how to look for an opportunity, how to read chart, how to carry out top-down analysis before you can scale down to your time of execution. That is where you normally place your trade. Then from there, you look for an opportunity, you position there. If it's a pending order, put a pending order. If it's an instant execution, if you are the one, you are always sitting in front of your chart. If you want to place an instant execution, all you need to do is you just set an alarm as price is coming to your area of interest, then the alarm will alert you, then you will come and execute your trade. So that being said, for the fundamental analysis, don't forget, guys, that you need to go to forexfactory.com. You click on calendar, then you see all the news that are ahead. All right, from on the 24th of August to 30th of August is just no more, no. We have just Thursday and Friday, because Monday, Tuesday, Wednesday, there's no news as regards to USD. So if you are trading other currencies like GDP USD, GBP, NZD, and all that, you can come here and add them to your filter, apply, then it will be populated here. So as far as I'm concerned, I only trade two pairs. So I don't need to, you know, overflood my the page like this for just no reason. So what I do is just highlight or rather select the ones that I need. Okay, apart from that, you visit my website, egetsfs.com. All right, there we have yearly mentorship, lifetime mentorship. These are the costs. So these are the things you stand to gain. So you contact us so that we can have you trade. All right. So that being said, let's proceed to the chart. All right. We have the Aussie. As we all know, Aussie is uh, gold USD. So now this is daily chart because when you want to carry out your top-down analysis, you start from the higher time frame, all right? Start from the higher time frame. You can start from the monthly, you can start from the weekly, but you must start from the higher time frame. As a day trader, all right, as a day trader, so what I do, start from the higher from the daily time frame. Now, this is where we have a high here. When price broke structure from here, it created this high. So we are going to mark, guys, follow up so that you understand what we are doing. All right. Anyway, you see, BOS is what we call break of structure. By now, if you have been following me, you understand what it means anywhere you see BOS. So, and this point here is where what caused the break of structure to the upside. All right. So this other block is still valid, but is daily order block. You target D1 OB. When you see OB, it means order block. It's still valid, but it's still very far. So we are going to just leave it pending. All right, you see, we have identified an opportunity here already. All right, if you're a swing trader, if you take your trade on a daily time frame, all you need to do is put a pending order here because this is the other block that caused the break of structure to the upside. All right, so in future, price will come back to interact with this other block. As soon as price get to this point, let me shade it by this up to this level so that you understand. Anytime price come to this level is going to push, there will be a reaction, it will push the price back, to push the price back up anytime. So now this last bearish candle, it could be bullish candle, but this last one here, before this massive push to the upside, this is what we refer as what? Another block. Another block. All right. So this one will leave it pending. All right. Let's leave this one pending. We are going to look for an opportunity that we can catch fast. So after this push to the upside, break of structure to the upside, price pull back to this support. Then we now saw that the push to the upside, it was supposed to push above this level, but it stopped shy here. And what happened? Price created a lower high, created a lower high. All right. It created a lower high. This is a higher high. All right, let's mark it. This is a higher high. Then it created a lower high here. So price pullback gave us what we call a market shift here. It gave us a market shift. Market shift. Anyway, CMS, you should just know that it's a market shift. Why is it a market shift? It's a market shift because price created a support, but the push to the upside failed to create a higher high. Instead, it created a lower high. Then, when the pullback now started, it now violated the support level, which is not supposed to be. Order flow, as you are bullish, price push to the upside, creates a support. It's supposed to break this resistance up, then come back, create a support, break resistance to the upside. So that is the characteristics of a bullish trend. Now, here you now discover that that movement was altered. Why? Because this guy here, this support level here, created a lower high instead of a higher high. So now it now created a push to this downside and created this support before the rejection. So then there's a push to the upside, all right, like this, break of structure, break of structure. So we are going to be marking it. Now, if we want to mark all this, well, that means we are going to spend much time. But let's just do it so that we will understand. So here, price created this support, it pushed to the upside, created a resistance, retrace, created a support, push to the upside. What happens? It now gave us a market shift again. Market shift without breaking to the upside, but this is an internal move. This leg now is what we are now. This is the leg we are now analyzing, this leg. All right. This is the origin now that is causing this push. This one, this is the origin that causes this whole push to this side. All right. So that is how you should always carry out your analysis. You know where the origin that caused the push. All right. Market shift. Then after the market shift, we have a break of structure here. We have a break of structure here. Then price created a high, pull back, giving us another market shift here. Guys, we should understand that once a support level is violated, once you are on an uptrend and a support level is violated, automatically that is a market shift. So this support was violated, you see, price came down. Now you see, price push came down and violated this level. The same way price pushed to the upside and violated this level. All right. So now that there's a violation, we'll now say, okay, this is another leg. All right. This one is one leg. This is another leg. This is how you should be analyzing your chart for you to know where you are in the market. It's very important. After this, price created a high, pull back, then market shift again. You see, price created a resistance here. It created a resistance. There's a pullback, then break of structure to the upside. For you to do analysis, you need to be very, very patient and don't miss out on any information. All right, you see break of structure. Then price now came back, violated these support. Remember, I told us anytime there's a violation of support when you are on an uptrend, what does it mean, guys? Drop it at the comment section if you have been following. Anytime we are on an uptrend and you see that a push, we see that price violating a support level. What does that mean for price to violate a support level while you are on an uptrend? If a trend is trending up and you see price pulling back, violating a support level, what does that mean? Before we started this video, I've already explained it, and I want you guys to drop it at the comment section if you'll be following me so that I will know that you guys are really following. When you are on an uptrend, and you now see that price violating a support level. What does that mean? All right. So drop it at the comment section. So this is a violation of support level. All right. We have already tagged it MX. So if you know what MX means, please drop it at the comment section. Then price created another low here. He gave us a low here, support. Give us a support level here. Now price now push to the upside from here. Then you see price creating lower low, lower high, this lower high, lower high, lower high, lower high. Price is like all these ones, they are just like equal highs, but this one here, this particular one here, it's a lower high. All right. And what caused this push? We can simply single it out from here. All right, this is what caused this push to the upside. You can see, you say D1, D1 OB, D1 order block. You see price pull back and is dishing out a buy. All right. So at this point, we are done with the analysis of this daily. Then we'll now scale down to get more information. All right, to get more information. All right. So let us, and here again, guys, we need to mark it because every information is very important. You can see here there's a market shift here. Where price created a resistance here, break structure to the downside. But if we look at it, this is a break of structure here. This is a break of structure here. You have to be very, this push to the downside is a break of structure. Break of structure then before this push to the upside. This is the other block now. This is the other block that caused this push to the upside. All right. So at this point now, we just need to scale down to 4 hours. So let's get what is actually happening. Let's get more information about this movement. Okay, so at this point, we know that we have scaled down to 4 hours. Now what we need to do is see price reacting from this level, but if we now want to narrow it down to 4 hour point of view, this is the other block here. All right. You see, but one thing you should notice is that price got to this level, this daily order block level, and you see the reaction. That's why I always tell people the higher you go, all right, the higher the time frame, uh, there's every possibility that the levels will hold better. Well, the higher you go, the stronger the levels. The higher time frame you go, the stronger the level. So if you are on a 15 minutes, 5 minutes, you cannot compare all those support and resistance level with 4 hours daily time frame, and even 1 hour or 2 hours. So that is what I meant by the higher you go, the better uh, the resistance and the support level are powerful. So learn to trade on a higher time frame. The only disadvantage is that you might not have plenty trades in a week. All right. But if you are trading on a lower time frame, you just see setup left and right. But on a higher time frame, in a week, maybe you just one trade. But if you take that trade, just one trade, it's a quality trade, guys. So let's even uh, let's be truthful to ourselves. It's better you trade on a higher time frame. That is the truth. So that being said, you can see price got here, reacted. Let me just highlight it for you guys so that you see. You see, price got here, tap into the other block. This is the daily order block. All right, tap in here. Then it started pushing to the upside. You can see, started dishing out a bar. Okay, let's go back so that you understand what I just said now. You can see. This is the candlestick. This is it. It tapped into it and it's pushing. It's pushing to the upside. So let's go back to 4 hours now. On 4 hours, on 4 hours, I have, you see, on 4 hours here, this is the other block. All right, this is the other block. From 4 hours, this is the other block from this point here. All right, this is the other block from this point. All right, then we can now scale down to 2 hours. Scale down to 2 hours. Just scale down to 2 hours. If you have to read this very one, you discover that, okay, price created this movement, break of structure to the upside. All right, let's put this break of structure here so that guys, you understand. And after this high was created, this lower high, it's a lower high because this one here is higher than this, all right? You can see when price created this high and pull back to this support level, it now violated this support level. Guys, when price violate a support level, when a support level is violated while you are on a bullish trend, drop your answer at the comment section. What does it mean when price violate a support level? I've already marked it and I will not say anything. Once there's a violation of support level, MS. The same thing apply even if the trend is bearish. Once a resistance level is violated, it becomes an MS. All right. Okay. So drop it at the comment section. Let me know your answers, guys. Breakout structure. All right. Another breakout structure here before price now push. Give us a market shift here. Give us a market shift here. Why did he give why market shift? Because It created the resistance here, pullback, created a support, but this support now pushed to the upside, violating this resistance. So MS. Then you see price pulling back here, going to the upside, break of structure. Break of structure, guys, break of structure. So that being said, now that we have seen all this, we now have to like, okay, let's scale down to 1 hour and still refine our entry. All right, scale down to 1 hour. Scale down to 1 hour. Let's scale down to 1 hour. Then we can see something here. If you want to do a fire brigade approach, this is what the other block that caused this break of structure to the upside. So this is the other block that caused the break of structure to the upside. And if you want to uh, read the internal structure here, you discover that this point here, there is a break of structure. This was the last break of structure to the downside before this push to the upside, breaking this level. And when you read it, maybe if you, from 1 hour point of view, this is what? A break of structure. But if you scale down to 30 minutes, you now discover that this point here is what? Is a market shift. Why is it a market shift? Because price created a resistance here. It created a resistance. It created a resistance. This, this is support, this is resistance. All right. Then break of structure to the downside, break of structure. Then price now turned from here, taking out this resistance level. This is what now gave us a market shift. All right. It's what now gave us a market shift on 30 minutes. This is a market shift. But if you go to 1 hour, you will discover that this point here, though is a market shift, but is a break of structure. Why is it a break of structure? It's a break of structure because this low is lower than this. All right. Price push, look at this, look at the flow. Price push to this point, pull back. It did not violate the support level. Then push to the upside. That is why the higher you go, the stronger the level. The higher you go, the stronger the level. All right. But if you now scale down based on this analysis, I'm just trying to teach the new traders how to analyze trend, how to analyze chart correctly. That is why I'm doing all this. All right. The newbies, those who are coming into the system newly, need to be taught the way you can analyze your chart anytime, any day in a very simple and precise manner without leaving out any information. All right? You can now see if now at this point, the opportunity we have here, the opportunity we have here is for price to come back. This is a high price to come back tap us in here, do change your character, then push to the upside. All right. And the problem now is that if this level breaks, fail to hold, that means this daily order block price will have to come back here before it push. That means if that happens, all these points here will now be used as a liquidity. This level here will not be used, will now serve as what? As liquidity. That is how it is. So it's better you stick to the higher time frame. As far as I'm concerned, that is my advice. Stick to the higher time frame. All right. Because if you go up, if you scale to 1 hour, you see that this chart is even more clearer. All right, it's more clearer. Everything originated from this point. All right, this move like this, you can see price is still coming at the end of the day, is coming to find way, is trying to find its way down to this point. So as far as I'm concerned, price is finding its way, trying to come and interact with this other block here that caused the whole move here. But if you are somebody that is not going to be that patient enough to wait for price to get to this level, to wait for price to return, if you are not patient enough to wait for price to return to this level, if you are not patient enough to wait for price to return to this level, what you need to do is you have to jump on this, all right? You have to jump on this. This is the other block that caused this break of structure to the outside. So you put your pending order here, put your pending order here, and wait for price to come and tap you in. All right. Simply put your pending order here, target this high, all right, and your stop loss below this low. All right. 10 pips stop loss. Or you can just give, let's give 12. All right. 12 pips stop loss. No, 11 pips stop loss. Stop loss rather. Beg your pardon. Okay, let's target H1 OB. So this is the opportunity here from the 1 hour point of view. You can take your trade. So as far as 1 hour time frame is concerned, uh, you can set your pending order here, all right? set your pending order here like this, and let's put the coordinates. The coordinates, we are going to set buy limit order. Buy limit order. All right. So we have the entry, the EP. Anywhere you see EP, that is the entry, your entry point. Your EP will be here. That is 3229.67. 3229.67. Let's check it again so that 32, no, 3329. Hmm? Let's be sure. Okay. Let's do this so that 3329. 33, 332967. All right. So our stop loss, we are given stop loss will be from this point here. All right. That's 33, 18, 30. 3318.30. Stop loss. SL. 331830. 3318.30. Then our target from this reversal point here, from reversal point, that is TP 337885. 3378.85. So guys, these are the coordinates, and this very point here, if this place did not hold, that means it's going to be used as a liquidity. So if it did not hold, what will happen is that price will have to use this point as a liquidity to facilitate the movement up to this level. So this one here is, you can see this OB is from the daily time frame. From daily, we refine it to 4 hours, from 4 hours to 2 hours, 2 hours to 1 hour. So this is the 1 hour OB here. We have refined it to this level. But if you look at it, you discover that the push started from here like this, but before the explosion from here. All right, but not to worry. This is the other block. So we'll leave this one. This one will be pending. This will be pending. But at the end of the day, I will also drop the coordinate. I'm going to drop the coordinate because something like this, I prefer midpoint, entry from the midpoint because it's very possible or likely that price will hit a little deep before a push. All right, so let's take the midpoint so that we'll be able to at least push our SL to this level. It's your XL that will determine the lot size that you're supposed to use. Have that in mind. Because there's what we call cost per pip, all right, you should know that it's your XL that will determine the uh, that will determine the lot size that you are going to use. Like right now, we are living, this is 8 pips, all right? 8 pips, because we are taking from the midpoint. Or we can even give the room, let's say, let's enter from the open. That is 12 pips, is not too much from the open, so that we will not miss out. 12 pips is not too much. All right, 12 pips is not too much. All right, 12 pips. Once it tap in, it's straight to the turning point here. You can see there's good risk reward ratio here on this one. So this coordinate is for this, then let's drop coordinate for this one. So whichever one you want, you like, you can you can if you choose to wait for this one. If you otherwise go with this. So as simple as that. These are the two opportunities that we have as far as uh, gold is concerned. So the coordinate for this is let's do it. Let's clone this so that it will be faster. It's still buy limit order that we are going to set. So our entry point is 3294.07. 3294.07. 3294.07. Then the Excel is 328199. 99. 3281. 3281.99. Then the TP is the same, 337885. 337885. So this is the coordinate for this, and this is the coordinate for this. The options is left for you now to everything now is now left for you to decide. Either you wait for this or you go with this. Either ways, both are set up for this. This one will first Because now price is making its way down. If you want to really know, go to 30 minutes, you see price is changing, is in a process of market shift coming down because this is a very massive FVG here. All right. So there's no way. Once price get to this other block, there will be a reaction. But if it fails, that means this is the target point where price will come, fill this, then before it start pushing to the upside. So that is how it is. Or even if you scale to 15 minutes, you see it's making its way down. All right. But I don't trade on 15 minutes. I don't go below 1 hour. What I do, I do my top-down analysis starting from daily, refine the other block from daily to 4 hours, 4 hours to 2 hours, 2 hours to 1 hour for precision entry, guys. So this is what we have for gold. Make sure you apply proper risk management. Apply proper risk management. All right. Apply proper risk management. It's very, um, it's very important, guys. It's very important. Apply proper risk management. Apply proper risk management. It's very important, guys. All right, so let's dive into this EU, that is Euro USD. All right, Euro USD. Daily, we can see this is the last break of structure here. This is the last break of structure to the upside. Even though, there's this small one, we have to recognize it because in trading, no information is too small. You don't need to neglect anything at all. All right, so this is the support level, and we have another support level. Remember I said once you are on a bullish trend, and how do you identify a bullish trend? When a price is making higher highs, higher low, higher highs, higher low. It's pushing towards a particular direction. All right. In this case now, it's pointing to the upside, pushing to the upside. Create a resistance, pull back to a support, break the resistance, create another higher resistance, pull back another. And once you see that a support is broken or violated, you know that that is what we call, drop it at the comment section if you know it. What do we call that? Once a support is violated and you are on an uptrend, a support is violated. What do you call that? Please drop it at the comment section. All right, drop it at the comment session. All right, with the MS, then this is a new support that price created. So at this point, let's scale down to 4 hours. So we're on 4 hours now. Okay, so we're on 4 hours now, and then we have another block here. This is an order block. There's an MS here. This was the last break of structure. Before price now come from here, giving us a market shift. The next giving us a break of structure here. All across the break of structure. This is the other block that caused the break of structure here. Is already mitigated. One price got here, it pushed. So already mitigated. You can see. Based on our analysis, we have already identified that there was another block here, but mitigated. This one here has been mitigated. It simply means that price has reacted off this level. It pushed breaking structure to the upside. It came back. All right, it came back, interacted with it. Then price, this other block now dish out a buy. So you can see, already dish out a buy. He has done his job. Then you can see break of structure. All right, break of structure to the upside. Price pull back to this level, but gave us a lower high. Then you now see price started coming down. Okay, coming down now. What happens here? I told you guys anytime a support level is violated, it then means that there's a market shift. All right, price came here, push like this. Now, at this point, a resistance level has been violated. After price created a market shift, then after the market shift, one moment, after the market shift, this point here, there's a break of structure. There's a break of structure here. Then, after the break of structure, you now see push to the upside. Then there's a violation of a resistance level. There's a violation of a resistance level. So price push, what causes it? This is the other block. All right, this is the other block. 4H, or rather H4OB. Guys, it's just very easy to carry out analysis. All these things you can always, if you have been following my videos by now, you you should have been doing your own your own top-down analysis, all right? So it's a very simple and straightforward. Why did we choose this, not this? If you know it, please drop it at the comment section. We have this candle here, we have another candle here. Why did we choose this as the other block? If you know the answer, please drop it at the comment section. That will show that you have been following me and you know what you are doing. So this is the other block because this is the last candlestick before this push to the upside. All right. This is the other block. So we have identified the other block. Now what we need to do is scale down to 2 hours. Let's refine it. All right, let's refine it. We can now scale again to 1 hour. Let's refine it again. We have refined it to 1 hour. Now all we need to do is, now it's very simple. If you prefer taking your trade from 15 minutes, all you need to do is go to 15-minute time frame because you have already identified the other block. Scale down, you just need to refine. If you click, you refine. You now bring it down. From the top, this candle, we measure it. Okay, let me show you guys. Oh, you measure it from the top, from the opening to the closing, because this is what do you call it? A bearish candle. You open from the top, so you click from the top, highlight it to the close. This is a level, then you shade it. All right, that is how to uh, highlight other block. And that is how to refine it. All right, refine it. If you like, if you don't want to take your trade on 30 minutes, go to 15 minutes, you can still refine it further. All right, like this. All right, because if you look at it, this is where the 1 hour, you see, this is the 1 hour. This is the 1 hour level. It's very possible for price to come, stop here, then go back. That is what we are trying to let you guys know that are just coming into the system. So if you say 4 hours, you see, this is where the 4 hours level is. You see, this is where the 4 hours level is. Now, you understand? This is where the 4 hour level is. If you say daily, you see the daily, there's no other block here. So you come 4 hours, starting from 4 hours, 2 hours, starting after the 2 hours, all right? You keep refining it. This is 1 hour, 30 minutes, this is 30 minutes, all right? This is 30 minutes. You refine it, you can refine it to 15 minutes. If it is 15 minutes now, you have to calm down. This is the other block here, all right? This is it. So what I'm saying is that it's very possible for price to get to this level and turn. It will not get to this level. So that is why me personally, I don't go below 1 hour. I've showed you how to refine yours. If you prefer to take your trade from uh, 15 minutes, you can scale down. You just need to scale down and refine. Then you take your trade. So let's we can see we have already um, showed you guys. And if you look at this point here, you discover that there is a break of structure to the downside here. Like I told you guys, every information counts. There's a break of structure here. There's a break of structure here. Then we now have internally here, we have market shift. Internally, on the lower time frame, you have what? Market shift. Why? Because price created a resistance here. All right. And there's another resistance here, another resistance here. So we have a market shift from here. So let's see, and this is a high. This is a high. It's a turning point. Then this is the low, and this is our entry. All right. This is our entry. And this is the low. All right, so let's drop the coordinates. So we are still going, we are going in for a buy. So we're going to drop buy limit order. Let's see, buy limit order. What is it? 27. I would rather prefer to take the midpoint where the price stopped. Midpoint. All right, so we push a little down. Let's give 20 pips. All right. Sometimes you give your trade room because of volatility. All right. Give your trade room so that price will not just get there, take you out, then turn and start going to a direction. So when it happens like that, it's very painful. So it's better you give your trade some rooms to breathe. Very important. All right. So the coordinates, that is coordinates by limit. By limit order. There will be EP, that is the entry point. We have the XL, which is the stop loss level. Then we have the TP, which is our target point. So the entry level, the entry point is 1.16090. 1.16090. Then the XL is 1.15887. 1.15887, right? 1.15887. All right. 1.15887. Then our TP is 1.17427. Not very well. 1.174. 27. So these are the coordinates for the pendulum. Please apply. Please apply proper risk management. It's very important. Always note that your entry point to your Excel level, the number of pips will determine your lot size. So at this point, I say thank you so much and enjoy your week. Like I said before, if you are getting value from this channel, you see how we take it slowly and we take our time to explain, to do the analysis properly without rushing. All right? If you are getting value, please you subscribe. After you have subscribed, activate the bell sign so that anytime we upload any video, you'll be the first to be notified that there is a new video. All right? Share it to your friends. If you have any group, share it to your groups. Who knows? Somebody might just be looking for a way to add additional source of income. That is it. If you are not interested in trading, your friend, your family, your colleague, people around you are looking for ways, means to have another channel of getting income. All right. So you share to them, like and comment. All right. Thank you so much. And on this note, I say thank you guys for watching and God bless you.